Thank you for joining us for the SEO Scholars Achievement Benefit and a conversation with Ken Lin and Micky Malka. We are grateful to have these two incredible changemakers in the FinTech space with us for tonight's event, and we're delighted to share perspectives on disruption in finance and scaling companies from 0 to 100. I'm Jackie Reeses. I'm a member of the SEO Scholars San Francisco Advisory Board, and I'm going to kick off with a quick intro of our speakers. Ken Lin is the founder and CEO of Credit Karma. As a business leader, Ken has always put consumers first. He launched Credit Karma in 2007 with an idea that everybody deserves to feel confident about their finances. He changed the equation that had long favored banks over consumers and has not only been incredibly successful. You might have heard that Credit Karma has agreed to be acquired for $7.1 billion, but he also has helped millions of people in the process. Next, we have Micky Malka, who's the founder of Ribbit Capital. He has founded 8 other companies and is an investor in many noteworthy financial technology companies, such as Credit Karma, Robinhood, Wealthfront, Invoice2go, and Nubank. Wow, wow, wow. So awesome night. Let's dive in here. So let's start with some questions. Ken, what problem were you trying to solve when you launched Credit Karma?
Well, first, thanks for having me here. What an honor and a privilege. To give a little context, back in 2007, and actually prior, if you all remember, there were these singing pirates that were going around on television talking about your free credit score. And the problem back then was there was no such thing as a free credit score. So what would happen in the predominant business model back in the early 2000s was you'd go to these sites, you put in a credit card number, you'd get a score, and they would enroll you in these credit monitoring programs forever until you realized that they were charging you $20 a month and you'd ultimately canceled. And the thinking for me was, oh my gosh, your credit is so important in the context of getting credit, renting a home, your auto insurance. I mean, there's just so many things that credit really matter for. And it felt weird that you'd have to pay $20 to go and access that. Moreover, it just felt like something that every consumer should have, given that it was your credit score, and why should you have to pay for your own credit score? So we went down, I think the long journey of building Credit Karma with the idea of let's give the score away for free. Let's educate consumers on how the industry works, how you can benefit from knowing your score and taking advantage of your score, and ultimately finding the right products. And if we do that, then there would be advertisers and others who would be interested in finding the right type of user for their products. And what I thought would be something that we could build in 3 or 4 years is now coming up on its 13th or 14th year in terms of our journey. But it's been an amazing ride.
Oh, unbelievable. Like, what an unbelievably successful company that really changed society and had such a positive impact on so many people. Micky, can I turn it to you? What did you see in Ken and Credit Karma that compelled you to invest in the company?
I met Ken in 2012, more or less, sometime in the beginning of 2012. And we hit it off on the first meeting when he was truly talking about a consumer first and how he had decided to always protect the consumer. There were many ways he could have made more revenues or more monetization decisions early, but he was not willing to do them because they were not the right thing for his brand or for his consumers, or for his members, which is the right name for Karmas. So that really impressed me, and we got along. He was always very mellow, but at the same time extremely aggressive. But the one story that really got to me about Ken was when we started to spend time together and trying to convince him to take investors, because he was not a big fan of having investors. He didn't like investors. One day we finished a meeting on a Friday afternoon, I want to say like 7 p.m. And we go downstairs in his office building, and I had my car parked there in the parking right next to his building. And I'm like, okay, let's go get your car. My car is here. He says, no, I parked my car 7 blocks away. And I'm like, why you park it 7 cars away? Because it's much cheaper. And I loved that moment. I knew that was the kind of entrepreneur that you wanted, that was really conscious. If he lived that life and that was the way he's building the brand, that meant that he was living the life of what he wanted his members. So I said, get on my car, I'll drive you the 7 blocks. And
that's great. That's great. Ken, do you remember what car Micky had when he drove you?
I'm pretty sure it was a Porsche, and at the same time, I still make fun of him because I was driving a 1996 Lexus LX 450, which I still drive.
Which he still has.
And I think Micky's probably gone through like 9 Porsches since then.
Yeah, maybe that's a lifestyle comment about VCs and someone who's on his 8th company versus an entrepreneur like you, focused on Credit Karma.
Or someone who knows how to drive, Jackie. That may be the other way of putting it. That's okay.
We're not going to go there because I'm not going to comment on people's driving skills. We'll have to do that off screen. Ken, how did your VCs like Micky help scale the company? They clearly give you good advice and good feedback.
Well, money is first, right? So Micky was willing to give me money, which was great. Now, it's interesting. I mean, having gone through and been around in the space before the term FinTech was even coined, it's just fascinating to me with the benefit of hindsight how much the industry has changed. I mean, in the early days, FinTech wasn't a term, but more importantly, there weren't very many operators in the space who understood financial services, but more importantly, how transformative and innovative it could have been, or would have been, using back then as a reference point. And I remember just getting so many no's up and down Sandhill. I remember, in context, it was 2008, 2009, 2010. So, we're either had gone through the Great Recession, but it just shocked me at the sheer number of VCs who just didn't understand the space and, didn't understand the value and the innovation that was going to come out of finance. And I'll steal a point from Micky, but when you look at the market cap of the leading banks around the world, I mean, I think a sum of that is something like $13 trillion. So that had to be reinvented, that had to be innovated, and I think much to Micky's credit, he understood the space and the benefit. And all joking aside, Micky is a fantastic operator, and that's something you often don't see in private equity or venture, is that there's a lot of great smart people, but having gone through the trenches and building a business from the ground up is really challenging. And for me specifically, I really wanted that advice. I really wanted people who knew what it was like to have a hard time making payroll, or doing the hard things and the hard decisions. And that's what I really appreciate about Micky all throughout the years. And I've got to say, he's been just just a wealth of foundation of operation, and I think usually good advice. Every once in a while, it gives me something crazy.
Yeah. Was there good advice on scaling the business that you took away from Micky, or any gem that you want to share about some of those early interactions?
Well, I'll give you a good interaction. I mean, Micky told a story about my car, but I'll tell you about Micky's wooing, right? So back in the early days, I mean, Micky, Ribbit, I guess Fund 1, didn't really, I don't think they had a track record at that point. But after our first introduction, I remember Micky, was very hands-off. But one of the things he did, which I only appreciate now in hindsight, is he invited me to 2 events. And at one of these events, he had Dan Ariely there, who is a really famous behavioral economist. And another event, he had Antonio Lucia, who at the time I think was the CMO of Visa. And at both of these events, there's all these really Antonio speak, and in each one of these events there's a really nice atmosphere. But at each one of these events, I'm also sitting right next to Micky, and we're just having a great conversation about life and whatnot. And come to find out 5 or 6 years, I kind of put those events on for you just so that we could spend a little bit more time together. So it was all part of his wooing. Needless to say, I have not been to one of those events ever since, but in the early days it worked really well.
That's creative. That's awesome. I'd love to hear from both of you what advice you'd offer to entrepreneurs, and in particular, entrepreneurs from underrepresented communities.
So I would start by saying that there hasn't been any moment in history to be more creative than today. And the opportunities abound. In particular in financial services, we are at the beginning of one of the most massive disruptions of the last 100 years. And we're probably only on year 6 or 7. Ken, as an entrepreneur, was one of the earliest ones that understood this. There's a group of people that started in 2007 to 2010 who really gets it. There was a second vintage that started in 2015 to 18. But now I would say that we're into some of the most innovative. Number one is go out and take the risk. Second, surround yourself with people that you trust and you like, in that order, not the other way around. And number three, prepare to fail and make that the gasoline to make you try to win. One of the conversations that I had with Ken early on was he probably had more than 80 meetings where he got a no in those years. And he was tired. He didn't want to talk anymore to investors. He was done. I don't think he ever visited our offices until probably 4 years until we were partners. Before that, it was always going and meeting at his office and spending time there because he was just not there. But he kept it. He kept working, and he built the business that represents over 100 million members just in the U.S. with better financial services and products. So I think those are the most important advice. And the more you hear that you're crazy early on, the better it is. It means that you're going after something interesting. The more somebody tells you, oh, that's obvious, I think it's a great idea, just you're not thinking big enough. Those are my first couple of advices.
Awesome. How about you, Ken?
Yeah, I mean, well, first, I like what Micky said there a lot. Well, I guess having lived it firsthand, and just as a little bit of context, my parents immigrated to the U.S. from mainland China when I was 4 years old, and we certainly lived a little bit of a, I would say sort of a lower income life where, I certainly remember my parents being on food stamps. I certainly remember, more of the challenging components and, sort of when you position it as underserved communities and entrepreneurship. I think one of the things that it took me a while to figure out when it comes to entrepreneurship specifically is, I used to want to do it for the money, right? And as someone who didn't have any back growing up, it just seemed like that ways to make wealth. And it took me a while, and more importantly, it took me multiple jobs to realize that wasn't the thing, right? What really matters when it comes to entrepreneurship and being successful as an entrepreneur is passion. You can't do it for the love of money. You have to do it because you love what you're doing, and the money will come. And that was something that, for me, took quite a number of years to realize. And the other note is that a lot of times we feel like, hey, we have disadvantages, and we certainly do at times, but you also have a number of advantages. And I guess for me, a little bit of the grit, but more importantly, the street smarts. I mean, I guess to the joke that Micky was making, I mean, I'd lived that life, right? I knew about being smart with my money because we didn't have much. And that is actually something that can serve you. So, certainly there's a lot of privilege and there's a lot of benefits to having money and making more money and being an entrepreneur when you have those things going for you. But don't sell yourself short in the things that you do have for yourself today. And those things that oftentimes can be a weakness can just be, at least for me, was very much of a strength. And over the years, following the things that I truly love in terms of passion, being really behind it, and thinking that I can make an impact, those have been the greatest joys, but also the most that I've had side of that. And certainly when you're younger, you might not even realize it.
That's awesome.
Jackie,
You both.
One thing to add there is, we're both immigrants that were not born in the U.S. I got to the U.S. when I was in my young 30s, low 30s. Whatever I had done before, didn't count when you came to Silicon Valley because it was in Latin America or it was in Europe. It didn't count for me as an entrepreneur here. So there is not a better meritocratic place to succeed than this part of the world. And if you have the value, the conviction, the drive, the humbleness and the humility to do what it's needed and what your heart tells you, there is no better place to succeed, and there's no, I don't know of any better place. We're very fortunate.
Your comments are really interesting because you were both outsiders, either coming from China or Latin America. And they're such interesting stories, and they illustrate grit. I'm curious what you both would kind of teach your kids. You've become these incredible, well-known entrepreneurs. Like, what would you instill in people in terms of core values based on what you've learned and your experiences coming here as an outsider?
Oh boy, we could probably spend a long time on this one. We're
going to go into therapy right now.
Yeah. Well, I think that notion of grit is really important to me, and something that my wife and I have talked quite a bit about. I think in many ways, the upbringing that we had, it defined us in so many different ways, and it built the character that we have today that allows us to move forward and I think achieve the things that we have. So, for me, I think my one of the greatest responsibilities I have today is actually as a parent, as a father, and making sure that I hope my success is also measured on, did I raise good children, and children that were not spoiled, children that had drive and ambition, hopefully who want to make the world a better place, but if nothing else, who focus on happiness more than material things. And that's also part of growing up and having these experiences where you think, dollars create happiness, and ultimately I don't think that's the case. I think it's like the drive for happiness, the drive for impact, the drive for meaning, and achievement and accomplishments. That's so much more rewarding, and these are things that are not obvious when you're younger, and they're not obvious until you actually go through life a little bit more. And that's something that I try to do well every day, which is really teach my kids to be good people when they grow up.
Awesome. Micky?
So my kids are a little older than Ken's kid, and the few things we do is, number one, we never forget where we came from, and we do spend a lot of our time teaching them and exposing them to Latin America, to the way we grew up, to the way the world really is, not this place on the beautiful, mostly beautiful weather when there's no fires that we have the chance to live in. But and second, it's around them with challenges. Is put them to work. My son works at a barbershop. My daughter works at a store as a cashier. They're 15 and 13, and my other one she's 10, and she knows that at 12 she has to start working. You gotta just position them and give them the chance to get exposed. But to say the least, the best thing you can do is just show them how the rest of the world looks like, and that's the way you give them grit. And last, for me in particular, is I love what I do. I think that the most my mission in life is to innovate in financial services, because when people have better access to financial products, the improvement of quality of life is substantial. No matter what you're doing, it's just substantial. If you can take a loan from the right place, even if it's online, compared to the guy who breaks your knees in your town, and the interest rates are much lower, it improves life. So anything that I can do and show them about the way financial services can innovate and make life better. And you've seen that, Jackie, at Square, and Ken has seen it at Credit Karma, how you can help people improve their score for 3, 4, 5 years in a row, how much better quality of financial life they have. So that's the way that's my mission. And so I live my mission on a daily basis.
That's awesome. Great. Thank you so much for sharing these personal stories. I want to bring it back to Credit Karma. I'd love to understand, Ken, what the inflection point was that motivated you to sell the company.
Yeah, I think going back a little, the notion of passion. I realized a few years ago that more and more what I really wanted with Credit Karma was the ability to have impact. And I'll bring in my family a little bit. I certainly remember being the 7-year-old translator, right, at back then was First Interstate Bank, and walking my parents through the financial services system. And trying to explain to them how checking worked, and what little I knew and what little I could translate. And a few years ago, I realized that was more important to me than anything else, right? More important than it's the size of Credit Karma, right? But like the impact of Credit Karma. And when I realized that, mission became really the defining objective of what we did. And the nice thing there is, we weren't looking to be acquired. It was never, we'd always talked about ultimately going public when it made sense and using that as a tool in achieving our mission. But Intuit came along, and as I spent more time with Sasan, who's their CEO, and more time with the team, and reading what they thought about mission, and I say reading because there's what you can say, but then there's also a track record of what you've done and what you've put on paper and your history for 10 years. And I realized that they had a very similar idea that we did, which is, with great scale, with great technology, with great data and trust, you can transform financial services in a way that is really profound. And I oftentimes think about how could I have changed my parents' lives if we could have simplified financial services. I think about how can we change the lives of that immigrant or that underserved, underprivileged person today if the technology existed. And that's been a passion, a driver of mine. And I think with Intuit, that was an opportunity, which is if we combine much more data and a bigger opportunity to realize that vision. And to me, that's been the most important thing.
It's awesome. What difficult decision did you face? If you had to pull out one, what was it?
Well, that in itself was pretty difficult, I got to tell you. I mean, this is something that for me, I've been working on for 13 years. It was just hard. But, I think more than that. I mean, I'll go back in our history and, as an early entrepreneur, and this is something that, a lot of people in the audience might, ultimately grasp with, which is, in those early days, keeping your business afloat is really challenging. And, a little of the, Credit Karma backstory is in those early days, we launched a product, everything was going on track, and the Great Recession hit us. And from there, no one wanted to fund us. And, I can count at least 4 or 5 times when we, could have gone out of business, effectively gone out of business, or had $0 in the bank account. And I remember at each one of those points, I realized that there was an opportunity for us. We could have sold the data, we could have sold that, sort of the consumer information and sent more emails. And I remember back then that I really cared about the brand that we were going to build. And, the tough decision back then was do you stay in business and potentially sell the data, do a lot more emails, and, potentially betray your principles? Or you just say, if it doesn't work, it doesn't work. And that was certainly hard. And I oftentimes reflect about those decisions. And we never did those things. We never sold the data. We never sent more emails. And what I distinctly remember telling our team back then was, let's just take pride in the fact that if we go under, we change one person's lives, 5 persons' lives, and be proud of that, and not any of the other stuff that would have been things that we would be ashamed of. And that has served us well. And I tell every new class of people who are coming to Credit Karma today is we're reaping the benefits of standing behind the brand, of making the right decision, right? That is the return on investment of doing the right thing. And sometimes they seem like really hard decisions, and they are hard decisions, but they can have outsized returns, in the long run. And I oftentimes think about that.
That's awesome. Thank you. I'm curious, Micky, how do you deal with exits? When thinking through should Credit Karma sell to Intuit, do you have a framework for helping entrepreneurs think through something like that, or advice, or every situation's different?
I think every situation is different, and I think it starts. A company always has imprinted the culture of the founder, and the founder's DNA in the way he communicates, the way his energy drives, his passion lies, and how he thinks about the future. It's always a driver. As an entrepreneur myself, I sold my first 4 companies, and Ribbit is my 5th one, and I hope I have the energy to run it for a very, very, very long time. And in those cases, there were reasons to do it that made a lot of sense. Sense for the market, sense for the team, sense for the product, sense for where the the world was going. And so I think it's very different for every single scenario and for every single company. And in every pattern, if you just do a mathematic analysis of it, you probably are dropping a lot of what's more important, which is the brand, the customers, the team, the employees, all these things that matter for a financial number, which makes no sense whatsoever. So we go and we spend time. I remember when this transaction was to occur and people were thinking about the numbers, I remember spending the weekend with Ken talking about what was the message to the team and discussing how is he going to do the town hall and what's the right tone and what does he feel, and that was more important than figuring out the cents and the dollars.
Wow, that's awesome. It's great. We only have a few more minutes, so I'd love to get your reaction on a few topics. So like the 30-second version of what you think of when you think of Bitcoin.
Micky Malka, he's like the godfather of Bitcoin.
Is he Satoshi?
No, I'm not Satoshi. I wish I were. I will have 1 million Bitcoin somewhere. I think it's gold. It's the ultimate digital store of value, and it will probably become the universal unit of account for macroeconomics in the next 20 years.
How about you, Ken? What do you think?
I just said Bitcoin's just Micky Malka. Well, I think the value story is probably TBD. I think the technology is, when it comes to the blockchain, is pretty impressive, and smart contracts and all the things that can stem from it. So I'll leave the dollars and the investing to Micky.
Awesome. Don't go politically correct on me, but now I'd love to get your reaction to FICO.
Well, listen, as a company, they're great. I think as a technology, and specifically the FICO score, I think it's somewhat archaic, right? No one uses a simple score anymore. Everyone uses big data to do all of their underwriting. So, and that's not a knock on them, more of like a sign of the times.
Micky, I know you'll never go politically correct on me.
Yeah.
I think the time has passed for FICO. And we will scratch our heads to understand why it's taking so long for it to literally just not be used anymore. There are much better ways to measure people's worthiness, and banks are doing a terrible job on maintaining this stale system that doesn't reflect people.
Awesome.
Is that better, Jackie?
Yeah, I was way more
that
PC.
was great. That was great. My answer would be somewhat similar, actually. And I actually think right now is one of the more interesting tests of credit scores and traditional ways of underwriting, because COVID totally changed the dynamic of having historical looking data that's relevant. And so it's a very unusual time when some of these old systems are being pushed to the limit. But I can't thank you both enough. We could spend hours talking with both of you. You're incredibly impressive serial entrepreneurs. It is absolutely an honor. That's all the time we have. Thank you, Ken. Thank you, Micky. Now for the big show, the SEO Scholars Achievement Benefit.